Welcome to Conversations, Season 2 of the MTA podcast series, a weekly audiocast featuring interviews with leading investment strategists, geopolitical experts, and other key thought leaders, brought to you by the Market Technicians Association.
Okay, this is Tim Braun with the Minnesota Chapter of the MTA, and with us today we have Katie Stockton, CMT, and she's with MKM Partners, which she started with in the year 2004 as the Chief Market Technician. She's been a practitioner of technical analysis for a decade plus and earned her CMT designation in 2001 and has served many positions at the MTA, which we all appreciate. And with that, I'm going to just kind of jump in. Katie, thank you very much for joining us. And
thanks for having me.
You're very welcome. It's been our delight. And in the presentation today, I think you brought up a lot of good points. And I think we probably want to start with your big picture on the S&P. Maybe you could give us some commentary on that.
Sure. Well, the S&P 500 has pulled back about 5% already from its highs, and that represents a loss of short-term momentum. But now we're pretty oversold from a short-term perspective, so I think over the next several days we should see an oversold bounce or relief rally, something that provides a better selling opportunity or something to take down exposure into or hedge into, because I do think over the intermediate term, which for me is about a couple months, I think we could see further downside risk for the S&P 500, and I say that because the loss of momentum has actually affected our intermediate term indicators, flipping things like the MACD indicator on the weekly bar chart to a sell signal, the first time that we've seen a sell signal in months. So to me that's significant. It does suggest that 1340 is at risk of breaking. That's the support that's being tested this week. And ultimately that puts us back near potential support around 1290 as being a secondary support level. So intermediate term, I'm looking for a lower S&P 500 and would be seeking out an intermediate term buying opportunity after further weakness, ideally around that 1290 area.
Okay, and with that picture, tell us a little bit about your view on commodities.
Commodities in general have obviously seen a pronounced correction. We've seen crude oil, of course, come well off its highs, and unfortunately crude oil tends to lead the market lately, so that's not a good thing for the S&P 500 necessarily over the next few weeks. But we do have oversold conditions in place there, and I do think downside risk may be limited by some support in the $90 per barrel area for WTI crude oil futures. And nat gas is really its own beast. We have seen a nice relief rally there, and I do think that we're seeing a bit of a turnaround or at least stabilization from a longer term perspective based on the monthly charts, but I think shorter term we're a bit overbought there. Whereas gold, of course, is broken down below some important support on its chart. It's a breakdown that's pending confirmation on a week close this week below about 1610, and that would target $1,500 per ounce for gold. So I think we have a setback there from an intermediate, if not a longer term perspective, where we could see more of a sideways environment unfold for gold. The silver futures look a bit more constructive to me, at least from a short and intermediate term perspective, than gold right now.
You know, I'm going to shift it up a little bit. There's a lot of people that like to know what our speaker's view of the market is, but there's also a contingent of kind of the listening group that likes to know a little bit more about the indicators that you like and why. So I'm going to kind of throw maybe a little bit of an oddball question. If you were stranded on a deserted island and you only used one indicator, what would that indicator be, and why would you take that one indicator versus the other ones?
It's an easy question for me to answer. It's actually something I talk about often, believe it or not, so maybe not such an oddball question, but it's the one indicator I mentioned in this conversation being the weekly MACD indicator. So a standard MACD indicator, which the parameters are 9, 12, 26, applied to weekly bar charts. And I say that because even though it's a lagging indicator, just like any sort of trend following or momentum moving average based device, is, it does tend to capture the bulk of the trend, and the trend of what sort of that time horizon suits me and my investing style. So it also has helped me, improve my market calls in my job, and that weekly MACD has been somewhat invaluable in terms of confirming breakouts, breakdowns, and what have you on an intermediate term basis. So that would be the one I'd take with me.
Fantastic. And that's the one that's helping you with this big picture call in the S&P? Is that how we connect those two?
It is, yeah. It's one of my primary tools right now in calling for a deeper correction, just for the fact that the weekly MACD for the S&P 500 flipped to a buy signal in late October, capturing pretty much the whole up move from that low, and of course now it's flipped to a sell signal. So the sell signals tend to last on average maybe 8 to 9 weeks, and let's say we're a couple of weeks into it, so we could see a little more room to the correction, but again there is a lag to it, so maybe 7 weeks into it we should see some stabilization.
That's fantastic. Katie, if some of the people who are listening to this podcast would like to know more about your work or contact you, how would they go about doing that?
We have a website. My firm is mkmpartners.com, so I encourage you to visit the website. There's a profile of our technical research and my bio and contact information that would be relevant on our website.
Fantastic. And can they, if they had a question specifically for you, could they reach you through that website as well?
Right, there is a phone number and an email address on the website, so that's one way to reach me, and I would encourage you to do so. There's also a discussion board on the MTA's website, which is another way to reach me more directly.
That's fantastic. Katie, is there any other commentary that you would like to just kind of throw out here into the podcast for today?
The one thing I would add is, I would just add that there's a new tool that I've started using this year called the relative rotation graphs. They were created by Julius de Kempener, and I encourage folks to look into them. They can find probably some information on his website, or if you have access to a Bloomberg terminal, the symbol is RRG. If you just plug that in, it really is a fascinating tool in terms of helping you identify things like sector rotation, normalized versus a benchmark. So it's really a great new sort of data visualization tool that I encourage people to look into.
That's great. Always wonderful to learn about new techniques. Katie, that's all that I have for you today. I certainly appreciate your time, and on behalf of the Minnesota chapter of the MTA, thank you very much for your time and your expertise.
You're welcome. Thanks for having me.